Hello everyone, and welcome. Today, we need to have a serious talk about your money. Specifically, we need to talk about where you put your hard-earned dollars to make them grow. This is what we call an investment portfolio. Think of it like a basket where you don't just put one type of fruit, but many. You might have some stocks, which are like owning a tiny piece of a company. You might have some bonds, which are like lending money to a government or a big business. You might even have some real estate or other assets. This collection, this basket of all your investments, is your portfolio. It is the foundation of your financial future. Now, why is having a diverse portfolio so important? I have said it 1,000 times. You cannot put all your eggs in one basket. If you only invest in one company's stock and that company does poorly, you could lose everything. That is a risk you cannot afford to take. By spreading your money across different types of investments, you are protecting yourself. If one part of your portfolio goes down, another part might go up. This is called diversification, and it is the single most important rule for any investor. It is your first line of defense against losing the money you have worked so hard to save. The goal of your portfolio is to help you reach your financial dreams. Are you saving for retirement? Do you want to buy a house in 5 years? Are you putting money aside for your children's college education? Each of these goals requires a different strategy. A portfolio for someone retiring next year will look very different from a portfolio for a young person just starting their career. The older person needs safety and stability. The younger person can afford to take more risks for potentially higher growth. Your portfolio must be aligned with your personal goals, your timeline, and your comfort with risk. So, you must be honest with yourself. You need to know yourself before you can know your money. What keeps you up at night? The thought of losing money or the thought of missing out on big gains? Answering this question helps you understand your risk tolerance. Your portfolio should reflect that. It is your personal financial plan, a roadmap designed to get you from where you are today to where you want to be tomorrow. It's not just about numbers on a screen. It's about security, freedom, and living the life you deserve. That is why getting it right is not just smart, it is essential. For many years, building and managing a portfolio was done in a very traditional way. You would either try to do it all yourself, or you would hire a financial advisor. If you did it yourself, you would spend hours, maybe even days, reading financial news, studying company reports, and trying to guess which way the market was heading. It takes a tremendous amount of time and effort. And let's be truthful, most people have busy lives. They have jobs, families, and other responsibilities. They simply do not have the time to become full-time market experts, and that can lead to costly mistakes. Hiring a human financial advisor is another common path. A good advisor can provide valuable guidance and help you create a plan. However, this service comes at a cost, often a percentage of the money they manage for you. These fees can add up over time and eat into your investment returns. Furthermore, advisors are human. They can have biases. They might favor certain investments they are familiar with, or they might be influenced by a temporary market trend. They can't possibly track every single piece of market data from around the world all at once. There is a limit to what any one person can analyze. One of the biggest problems with traditional investing is the role of emotion. I see it all the time. People get scared when the market drops, so they sell everything at the worst possible moment, locking in their losses. Then, when the market is soaring, they get greedy and buy in at the very top, just before a correction. Fear and greed are the two emotions that will destroy your wealth faster than anything else. Making investment decisions based on a gut feeling or a hot tip from a neighbor is a recipe for disaster. You need a disciplined, logical approach, not an emotional one. This old way of doing things often leads to a portfolio that is not truly optimized. It might be too risky, or it might be too conservative, causing you to miss out on potential growth. It might not be rebalanced often enough to stay aligned with your goals. Think about it. The world is changing constantly. New technologies emerge, global events happen, and economic conditions shift. A portfolio that was perfect last year might not be right for today. The traditional, slower approach can struggle to keep up with the speed of modern financial markets, leaving you and your money vulnerable. Now, there is a powerful new tool that is changing the game for everyday investors like you. That tool is artificial intelligence, or AI. Please, do not let the term intimidate you. It is not as complicated as it sounds. Think of AI as an incredibly smart and fast assistant that is here to help you make better financial decisions. It is like having a team of thousands of expert analysts working for you, 24 hours a day, 7 days a week. This technology can process and understand vast amounts of information, far beyond what any human being could ever hope to manage on their own. So, how does it work in simple terms? AI-powered investment tools connect to the global financial markets. They absorb everything: stock prices, economic reports, company earnings, international news, interest rate changes, and even social media trends. They take in millions of data points every single second. An AI system does not get tired, it does not get emotional, and it does not have a favorite stock because its cousin works for the company. It operates purely on data and logic, which is exactly what you want when your financial future is on the line. It is a disciplined approach to a world that is often chaotic. The real magic of AI is its ability to find hidden patterns and connections within all that data. It can see how a change in oil prices in the Middle East might affect a technology company in California, or how a government policy shift in Europe could impact your bond investments. These are complex relationships that are nearly impossible for a person to spot in real time. By identifying these patterns, the AI can predict potential risks and opportunities before they become obvious to everyone else. This gives you a significant advantage in the market. This is not about letting a robot take over your money completely. It is about using a powerful tool to enhance your own decision-making. The AI can present you with suggestions. For example, it might say, your portfolio has become too exposed to the technology sector. We suggest rebalancing by selling some tech stocks and buying into healthcare to reduce your risk. It provides clear, data-driven recommendations that you can review and approve. It empowers you with insights that were once only available to the wealthiest investors and largest financial institutions. Now that power is available to you. Let's look at how this works in the real world. Imagine you have a goal to retire in 20 years. An AI-powered platform can help you build a portfolio perfectly tailored to that timeline. It will select a mix of investments designed for long-term growth. But it doesn't stop there. As you get closer to your retirement date, the AI will automatically begin to adjust your portfolio. It will gradually sell off riskier stocks and move that money into safer investments like bonds. This process, known as a glide path, helps protect your savings as you approach the day you need to start using them. Another key benefit is risk management. The AI is constantly stress testing your portfolio against thousands of possible future scenarios. What if there is a sudden recession? What if inflation goes up? The AI runs these simulations to see how your investments would hold up. If it finds a weakness, it will suggest changes to make your portfolio more resilient. This is like having a financial fire drill for your money. It helps you prepare for uncertainty and reduces the chances of a nasty surprise, allowing you to sleep better at night knowing your investments are being watched over. This technology makes sophisticated investing accessible and affordable for everyone. You no longer need to have millions of dollars to get access to top-tier portfolio management. Many AI-driven platforms, often called robo-advisors, have very low minimum investment requirements and charge fees that are a fraction of what a traditional human advisor would. This means more of your money stays invested and working for you, compounding over time to build your wealth even faster. It levels the playing field, giving you the same advantages as the big players on Wall Street. Ultimately, using AI for your investments leads to a more disciplined, less stressful, and more successful financial journey. It removes the guesswork and the emotional roller coaster from investing. It provides a clear, logical path toward your goals, whether that is a comfortable retirement, a new home, or financial independence. By embracing this technology, you are not giving up control. You are gaining a powerful ally. You are making a smart, strong, and confident choice to secure your financial future. And that, everyone, is a decision you will never regret.